Good morning, everyone. My name is Sarah and I will be your webinar moderator today. Today's webinar is sponsored by Platinum Partner Packer and the Dealer Network. Whether it's moving freight across the nation or going the last mile, their DAF trucks are always delivering. Today's webinar is being presented by Chris Sant and Jordan LaRusso from Ryan. Chris leads Ryan's Australian fuel tax credit practice and has over 12 years' experience in advising clients across various sectors, including being part of the team that ran the Linfox case, which changed the FTC landscape for all taxpayers. Chris works collaboratively with the ATO to resolve disputes. Chris previously worked in the Big Four and sits on the ATO's Fuel Schemes Advisory Forum. Jordan is a senior manager of indirect tax and has over 5 years of expertise in the areas of fuel tax credits and GST. Prior to joining Ryan, Jordan worked for a Big Four firm and was on secondment at one of the largest government fuel users in the country, where he redesigned its entire FTC claiming process. His knowledge and experience is of immense value to clients as he helps develop new and innovative solutions. Like always, we'd love to hear from you during today's presentation. If you have a question, please feel free to type in your questions in the Q&A section at the bottom of your screen. You may send in your questions at any time during the presentation and we will be answering them at the end of the session. So welcome, Chris and Jordan, over to you.
Thanks very much, Sarah. Welcome everyone. And obviously thank you to Packer and the Dealer Network. Recently done some work in the fuel tax space with Packer actually, and they're a very big supporter of the sector. So thank you guys. Sarah's obviously done a very big introduction already, so we won't go into too much detail, but based on the last session we did for Nat Road around fuel tax credits and the budget changes, we're looking to speak for about 25 to 30 minutes at most and provide 30 minutes for questions. In that last session, I think we had at least 30 minutes of questions. So today we'll run through the budget changes, the fuel tax, some hot topics, and then very interested in providing sufficient time at the end of the session for those questions. So Sarah's introduced us, but the key purpose today is to discuss the fuel tax rate reduction, which was released in the March federal budget and was really the largest change to the on-road claims for the transport sector since the implementation of fuel tax credits back in 2006. There's been a lot of myths and a lot of falsehoods said around these changes, and there's been a lot of issues with these changes. And today we want to dispel those myths by sort of just stating some of the facts around these changes, some practical tips, and sharing some recent correspondence we had with the tax office around these changes and their interest in making sure clients don't overclaim their entitlement as a result of these changes. Jordan, to the next slide.
Yeah, thanks, Chris. And I think the key thing to do first up is to go through what the budget changes were, what they meant, a bit of a refresh from March, and the budget handed down by a government which is no longer in power at the moment. So federal budget effectively halved the fuel excise rate for a 6-month period. So prior to the budget changes, fuel excise was levied at a rate of 44.2 cents per litre, and that was halved to 22.1 cents per litre amidst growing inflationary pressures, cost of living, and just general increases in pricing. So fuel suppliers were meant to pass on this saving of 22.1 cents per litre on all fuel sold at the bowser. The Treasurer warned that the cut would take 2 weeks following implementation for it to be seen at the bowser. There was no real warning of this happening. We only became aware of it the day before the budget was handed down. Similar with the tax office, there wasn't much guidance provided by the tax office prior to it or immediately after. The Treasurer said they would make sure that these savings were passed on in fuel. So it appeared to be a win for the economy, but the key thing was that the benefit for trucking and transport operators was that the only improvement was at a rate of 4.3 cents per litre. And the reason why it wasn't the 22.1 cents per litre that the government banged on about was due to the operation of the road user charge and the impact of using heavy vehicles on public roads on the fuel tax credit rates that you can claim. We'll discuss what this meant both numerically and in terms of the changes later on. But the key thing there was that the benefit for trucking was only 4.3 cents per litre. Now, these reductions to the fuel tax credit rates change were only meant to be temporary. They were meant to solve or attempt to solve a lot of the pricing issues and price of living issues that the economy were facing. And it will now end on the 29th of September 2022. So in 8 days' time, if I've got my date correct. The fuel tax credits are obviously a large part for transport operators in their business activity statements. This had a direct impact on what was being claimed and effectively what was being paid or refunded from the tax office. We were aware of a lot of clients having a bit of hardship over the changes to these rates and what it meant. And that goes back to that only 4.3 cents per litre benefit that trucking received. Those changes, though, should have had an impact on how you calculated your fuel tax credit claims for the last 6 months. The key one being that there was no on-road claim available. So previously being claimable at a rate of roughly 16 cents, that became 0. And then fuel that was used either off-road or in auxiliary equipment was claimable at 22.1 cents per litre. Now I'll go into the next slide, which goes through what the changes were and the impact of the numbers and what it means from 12:01 on the 29th September 2022 onwards. Just prior to jumping into that table in the middle, I refer to the dotted table at the bottom, which says the law, which is section 43-10 of the Fuel Tax Act, says the following. What that means is for heavy vehicle operators, which the majority of people on today's call would be, is that you claim the on-road rate for fuel used in heavy vehicles, and you can claim the full rate for one of two reasons, being fuel used in auxiliary equipment. So think about EWPs, think about compactors for the garbage and waste industry, tippers and the like, or fuel used off a public road. So fuel used in your depots, mining sites, etc. So I'll go back to the table now, which shows what the fuel excise rate was, or the full FTC rate. Previously 22.1 cents, that now jumps up to 46 cents, irrespective of what you use the fuel for. There will be 46.0 cents per litre of fuel excise levied on the fuel that you acquire. The road user charge has also increased. So it's increased from 26.4 up to 27.2. That's been snuck in around these rate changes as well. And it's quite interesting that there's been 2 increases to the road user charge in the last 2 or so years, being 0.258 up to 0.264 and now 0.272. Prior to that, the road user charge was unchanged from 2017, and prior to that, the road user charge was actually reduced. So we're seeing an increase in the road user charge. It appears to be a method that the government and tax office are using to recover a large amount of tax on fuel. And of course, we can't rule out any changes in the next few years. The last line there that you'll see in the table is the on-road entitlement, or the on-road FTC claim. Now that's the rate that you are entitled to claim a fuel tax credit for fuel used in your heavy vehicles on a public road. So previously it was at 0 cents due to the reduction in the rates. That's now bumped up to 18.8 cents per litre. For those not aware, the road user charge is effectively the difference between the full fuel excise and the entitlement that on-road heavy vehicle operators receive. So that difference being 27.2 cents is effectively what's taxed and recovered by the tax office and the government. I'll move on to the next slide unless, Chris, you have anything that you wanted to add to this?
No, nothing to add. The key message really is that the current on-road rate is 0 cents a litre, and the on-road rate as at the 29th is 18.8 cents a litre. We'll go into the transitional issues that we expect to occur, but that's the high level finding. The other thing that's obviously important is that you can still claim the higher fuel tax rate, which was 22.1 and will become 46 on fuel used in powering auxiliary equipment on vehicles, as Jordan said, like refrigeration units, and fuel used off-road in heavy vehicles as well. So you can still do those calculations, and you've been able to do those calculations over the last 6 months. A lot of people weren't aware of that and just didn't claim anything over the last 6 months, but you can still claim the auxiliary fuel and the off-road fuel over those 6 months. So now's a good time to correct it, get it right, and obviously claim the right rates respectively.
And just to add to that, we're referring here obviously to the different rates for heavy vehicles. If you use fuel in any form of plant and equipment, so if you have a generator on site, or use fuel in machinery, an excavator or loader or skid steer, they're seen to be the fuel tax credit rate that you use is the all other business uses, so the 46 cents rate as of 29th of September. So those assets are still claimable at the higher rate. We've just focused today's presentation on what it means for heavy vehicles.
So the big issue, guys, is how you implement those changes from a practical perspective. So the way the changes were implemented, it's a hard and fast 6-month temporary reduction. So the rates change from the 22 to 46 and from 0 to 18.8, effectively at 12:01 on the 29th of September. So the difficulty there is that the fuel must be acquired by your company post 12:01 on the 29th of September to be entitled to the new fuel tax credit rates. The biggest issue for our clients will be the fact that most of you have bulk fuel tanks on site, and most of you calculate your fuel tax entitlement not when the fuel is acquired from the fuel supplier, but when the fuel is drawn out of those bulk fuel tanks and you use a data fuel or similar system to calculate your entitlement. Given that the change occurs on the night of the 28th, the fuel that you have in the bulk fuel tanks on site at that time and is used post the 28th is entitled to the old fuel tax credit rates. So 0 cents a litre and 22.1 for off-road usage. This is obviously an area of concern for the tax office, where companies will claim the new fuel tax credit rates for fuel that is used from the 29th and not fuel that is acquired from the 29th. So there's a potential risk of overclaims. The tax office contacted us and members of the Fuel Schemes Advisory Forum yesterday, and contrary to their very quiet approach to the changes on the way in, they are very forceful in suggesting that they will be reviewing taxpayers and reviewing these changes, given that it leads to a risk of overclaim by adopting the approach of simply changing your entitlement overnight. So the tax office is obviously very focused about revenue rather than helping taxpayers, which is clearly not what they're set up to do. They're meant to do both. They're very focused on loss of revenue, and they'll be very keen to make sure clients aren't overclaiming in respect of the fuel held in stock on the night of the 28th. A practical measure that can be implemented by all our clients is to dip the fuel tank on the night of the 28th, understand what you have on hand, and effectively not claim a fuel tax credit for that fuel and claim fuel tax credits for all fuel acquired from the 29th. That should be relatively easy for most operators to do. I would expect from a practical perspective, most operators will begin to claim fuel tax credits from 1 October and not worry about the 2 or 3 days at the back end of September. Some may simply not worry about, claiming anything in September and just claim for fuel use from 1 October. you're probably going to get near abouts the right result with that. So I think a lot of people are going to take that sort of practical approach to these changes, notwithstanding what the tax office are thinking. The other key point here is around the fact that if you have claimed nothing over the last 6 months, you've understated your entitlement. You were entitled to something. You just weren't entitled to the on-road rate for your heavy vehicles. So now that you're going back to claiming your fuel tax credits, it's a really good time to correct that. So what we would suggest is looking at your fuel tax over the last 6 months, and making any necessary corrections. Obviously, under the tax law, you can still go back 4 years to make corrections on fuel tax entitlements. And obviously, you can go and do that as well. That's something that's really important, particularly if you view that you've underclaimed your fuel tax credits. Next slide, if you could, Jordan. So as we suggested just then, the tax office are concerned that the rate changes will lead to fuel tax overclaims and have emailed Nat Road and Ryan about this. Trucking operators should be very aware of that. The tax office are very focused on revenue, and practically what you should be doing is understanding the fuel held in stock on the night of the 28th and making an assessment as to the correct fuel tax rates for that fuel and making the change to your process from fuel acquired from the 29th. It's a mess. Like it's straight up a mess. And it's going to be it's going to cause issues and people are going to get it wrong. But practically dipping the tank and claiming for fuel acquired from the 29th is a very easy way to make sure you get it right. Advisors can obviously help to make sure you've got the right claims. And that's where we can come in and assist. Jordan?
So just few key takeaways from today's presentation. Again, we're purposely keeping it a bit short so we can reply to any questions that you may have. As I think we've alluded to throughout the presentation, that it was a change that was spurred upon or put upon the transport industry with very little to no warning. It had an immediate effect on the financials, the tax positions, and the fuel costs of the businesses. It was, for some businesses, it was to their detriment, and there was a misconception that transport operators received 22.1 cents per litre of savings, where in fact it wasn't. So with all that in mind, as well as the complexities of applying the last 6 months in the fuel tax credit rates, where you receive 0 for your on-road fuel usage and a decreased rate for anything considered off-road. Now is actually a really good opportunity to go back and not only look at those 6 months, but also back 4 years. So there is likely, in our experience, 9 out of 10 operators are underclaiming their fuel tax credit entitlements. It's a straightforward scheme that has been made extremely complex by the tax office's rules and guidance. And it's a bit of a dogfight now in trying to work out what your entitlement is. So now becomes a really good opportunity to go in and review your claims. And as listed on the screen now, you can go back 4 years to fix any errors.
I wanted to make a few other points here, Jordan, very quickly. One thing that came out of these changes, obviously we speak to a lot of transport operators, including some that are on this presentation, is that the fuel tax changes really exposed transport operators in respect of not having fuel levies in place and not having fuel levies that actually work in respect of dealing with the fuel tax credits. So that's a really important thing, is with these upcoming changes, it might be an opportunity for you to ensure that you have a fuel levy in place and that it works correctly with the fuel tax changes. It's a really important thing, and really showed that there was no ability for operators to pass through the burden of these changes, whereas some that had effective fuel levies were obviously not exposed to these changes and actually didn't come out of their line, it came out of their client's line, which is obviously quite important. So that's another thing, is that a lot of people, it's shown that they didn't have effective fuel levies in place. And obviously that's something where there's an opportunity now to potentially correct that in line with those changes. The other thing we obviously heard was that there was clearly no, respite to fuel prices, notwithstanding that, there was meant to be a 22 cents a litre drop in fuel prices. Looking at the unleaded fuel price recently, it seems to have dropped off a cliff in the last few months, which can only indicate that the fuel suppliers are very cautious of making the public perception being that they obviously are going to increase the excise in line with the changes and not get this windfall gain. So you will expect to see that fuel price shoot up overnight by at least 22 cents a litre. So that's a real important thing. Obviously, you just got to make sure you do your fuel tax credits correctly. There's nothing you can do around the fuel price. So there's been a few questions. Dale Ellis asked if we can have a copy of the slideshow, which is absolutely what we'll be doing. We'll be happily sending it out. The next question is from Patricia Barnes, who mentioned that she's a little confused. She has 6 buses and 3 trucks. I was of the understanding I couldn't claim for 6 months. Did you mean just off-road? So yeah, so over that 6 months, you could still claim off-road usage over that 6-month period. So that's not only with excavators, loaders, forklifts, diesel washers, all of those things could be claimed at the 22.1 cents a litre, but fuel used by your trucks and buses off-road or empowering, auxiliary equipment on those trucks, they might be tippers or blowers, all of that fuel usage was still eligible at 22.1. So you couldn't get the on-road rate for the fuel, but you could still claim the off-road usage or auxiliary usage in your trucks during that 6-month period. Not everyone does that calculation. For some people, it's not worthwhile to do that calculation. But if you have that calculation or can do that calculation, you could still claim 22.1 for the off-road or auxiliary usage in your heavy vehicles over the last 6 months. There was a few questions, Jordan, that came through prior to the session.
Yeah.
Do you have those questions handy?
Yeah, I do. But I just think there was 2 more things in terms of the takeaways that I will just quickly touch on. That middle one about it'll be obvious to DTO who did not change the FTC process. So the point we make there is obviously the tax office doesn't have the ability to go in, look at every single claimant's calculations. At best, they receive the final bit of the calculations being the fuel tax credit rates or fuel tax credit claim that you lodge in your BAS. There would be systems in place that the tax office have and data checking, which would show if your claims for the entire 2022 calendar year remained constant, including the reduced excise period, that will most likely set off a red flag. If you had implemented the changes correctly, your fuel tax credit claims would appear to have halved or dropped even more than half during that March to September period. So if for whatever reason you hadn't made those changes and kept using the old fuel tax credit rates, there may be a chance that the tax office ask why the rates and the claims didn't change.
Yeah, and further to that, they do a lot of trend analysis. So, to Jordan's point, if you haven't corrected your entitlement and corrected your claims, it's going to be fairly obvious in their systems because the numbers haven't changed. And further to Jordan's point, you'd expect most transport operators' claims to drop by at least 80% up to 100% during this period. So it's going to be very obvious to the tax office of who's done the wrong thing over the last 6 months.
And finally, just a reminder of those new rates. Excise is being levied at 46.0 cents per litre. That's also the fuel tax credit rate for auxiliary and off-road fuel usage in heavy vehicles and in plant and equipment assets such as generators, excavators, etc. The new on-road rate is 18.8 cents per litre, and the difference between the two is the road user charge, which has also increased. Chris was right, we did receive a few questions prior to the webinar kicking off, and I'll just read them out and we'll go through them individually. Keep those questions coming in the chat function if anything springs to mind during it. So the first question we received was, I have GPS that tracks where my trucks are. Why can't I just use what it says for a fuel tax credit claim? What more have I got to do? So that's a very good question. It's a timely question. It's something that the tax office is also reviewing. GPS solutions are great and can definitely be used to calculate off-road fuel usage if done correctly. And like I said, the ATO are reviewing this area as there needs to be more than simply taking of GPS data or results from your GPS provider and assuming that it's correct. You need to be confident that your GPS provider has correctly identified locations which are considered public roads and locations which are not public roads. There's been quite a bit of conjecture about what the difference is and what previously may have been considered a off-road location, which is no longer. The other thing which is key here is also linking back to your actual fuel usage. So we find a lot of GPS providers in the space will use their GPS software to calculate not only fuel used off-road, but also fuel used on a public road. And that, say, might be a vehicle, that vehicle used 1,000 litres per your GPS data. If you pull out your Caltex records or your Ampol rather, or your fuel records for that month, and that vehicle actually used 4,000 litres in total, you're going to have a discrepancy between the two, and more importantly, that's going to discredit the results of your GPS analysis. And finally, the last thing I'd say here, and I'll let Chris make a few comments as well, is that the ATO would expect that sense checks are performed. If you're a line haul operator that travels Brisbane to Melbourne, and apart from popping up into servos or the distribution centres, you spend all your time on highway. If your GPS result is returning an off-road percentage of, say, greater than 50%, that's not going to pass the pub test. There's obviously something that's going wrong during the analysis, and the tax office would simply not accept that you've relied on GPS data. GPS providers aren't tax advisors. There's an importance of using your own accountants and finance team or outsourcing to a fuel tax advisor to get the correct technical. GPS providers, like I said, they're a great assistant to fuel tax credit claims, but they're not the one-stop shop in any regard.
On the queries we received, there's Dale's also wrote in and said in his case, he's continued to claim 22.1 for the fridges during the last 6 months, and that's absolutely right. So most operators we spoke to were aware of that, but not everyone. And if you made a call not to claim the 22.1 over the last 6 months for your fridges or for fuel used in equipment, obviously you can now correct that in your next BAS. You don't need to go back and correct the last 6 months. You can just correct it in a current BAS. Sanawara talked about accounting for fuel that's on hand or in the vehicles before the 29th. Obviously, fuel in the vehicles before the 29th is eligible for no fuel tax credits. Fuel acquired from the 29th is eligible for the higher rate. If you use fuel cards and petrol stations, it's quite easy because you know when the fuel's been acquired. Where you have a bulk tank, obviously there's a gap between when you acquire it and when you use it, and that causes the confusion around the fuel tax rate. So it's all fuel acquired from the 29th. Obviously, when you're acquired at a petrol station, it's used. When you're acquired in a bulk tank, it's obviously might be used later in time. So that's why if you've got bulk tanks, you really need to be careful with regards to how you deal with the stock on hand. The other question that was put in was around that specific issue. So when in the last webinar, we spoke about the practical tip of claiming a fuel tax credit for all fuel in the bulk tank on the 29th of March, and then potentially moving back to your existing methodology on the 29th of September. So two things around that. One is that most operators who claimed for all fuel in the tank on the 29th probably will continue to use an acquisition methodology going forward. So rather than looking at use, they'll look at their acquisition data and just continue to use an acquisition method prospectively. Where people are moving between acquisition and use, and claiming on the 29th. You just got to be careful that you don't double dip with those changes. Given that the fuel acquired on the 29th is entitled for a higher fuel tax rate, obviously it's probably also got a higher fuel price, so the benefit in delaying things is not going to be substantial. But that's something to note. And that anonymous attendee, happy to if you reach out to talk about that specifically. Another question in from Dale talked about where they have a supplier bulk tank on site. And that's a really good question. There's obviously one very notable fuel supplier that drops container fuel tanks on site, and the fuel is actually owned by that fuel supplier and not by the trucking operator. So when the fuel's drawn out of the tank, obviously they should be calculating the excise paid at the higher rate at the time, and you should be claiming the higher fuel tax rate. The difficulty with that arrangement is that you might have had a one-off negative impact when the rates changed, and you might get a positive impact on these changes here, but it's fairly complex for that fuel supplier. So Dale, happy to talk about that. There was a couple of other questions there, Jordan.
There were two more questions that we received prior to the webinar. The second one is, if I've made a mistake on my fuel tax claim in the past, how do I correct it? Can I just adjust my current claim? And that's again another great question, something which affects the majority of fuel tax claimants, or anyone that prepares the BAS. So when we talk about fuel tax errors, we talk about two types of errors. What's known as a credit error, and that refers to an underclaim of fuel tax credit. So the tax office appears to owe you additional refunds. The other type of error is a debit error. And the debit error is where you've claimed a greater fuel tax credit entitlement than you should have. So you've claimed a bit more than what you should have done. If you talk about the credit errors first, which are the underclaimed, you've got 4 years to go back to recover your underclaimed credits. Now, underclaimed credits can mean anything from fuel that you didn't know existed or didn't know you had acquired, and you hadn't made a fuel tax credit claim at all, to fuel that you've acquired only at the on-road rate, but in reality had used it for auxiliary equipment or off-road usage. Now, for credit errors, you are allowed to make that underclaim or recover that underclaim for the 4-year period in a current BAS. And by current BAS, we mean that if you're a monthly lodger, the August 2022 BAS was due today or is due today. You are able to claim 4 years in today's BAS, being August 2018 through to August 2022. If you go into the debit errors, so again, debit errors are where you have made an overclaim. You've claimed too large of a fuel tax credit back from the tax office. There are time and value limits on whether you can correct those claims in a current BAS. So again, in the August 2022 BAS. Now, it also depends, so it's time and value limits. In terms of timing limits, it depends on the size of your business. For businesses that have a turnover of greater than 20 million, you can go back and correct 12 months, errors you made in the last 12 months in a current BAS. Where your turnover for your business is less than 20 mil, you've got 18 months worth of time to go back and correct in a current BAS. So in addition to those time limits, there's also value limits. And those value limits refer to the size of the error you've made. So if you've made a minor error, and you're a operator of less than 20 mil turnover, you should be able to correct it per those time limits. If your error is quite large though, you may not be able to claim it in a current BAS. Now, where you can't claim it in the current BAS due to those rules, you will need to do one of two things. You'll need to amend your tax returns, which you can do either manually via paper returns, or via the tax agent portal or business portal for the tax office. Or the other alternative is that you can write a submission to the commissioner advising of the mistake that you've made, and requesting the commissioner amend your previous tax returns to correct that error. Now, where a debit error does occur and it's outside of those 12/18 month periods, there is the potential risk of administrative penalties and interest to be applied by the Commissioner. There are allowances provided by the Commissioner if it was just a genuine mistake and that you're committed to correcting the issue now and going forward. The Commissioner may elect to remit those penalties and interest, but it's not a definite each time. Chris, see if you had any comments in regards to making mistakes on fuel tax credit claims.
No, but look, if you overclaim your fuel tax credits, you'll most likely be able to claim it in your next BAS and fix it in your next BAS. I think it has to be a really bad stuff up to not claim it in your next BAS.
Yeah, and there's been very little, and Chris and I've experienced very little times where the error is so large that it needs to be corrected outside of the current BAS.
So I want to thank everyone for your time today. We'll be sending out the slides post this webinar. We're also happy to jump on a call with any of you to talk about these changes. That's obviously no obligation discussion. Happy to speak about the changes, how it impacts you, given it's a very difficult area and something where we fully expect the tax office to be reviewing and to put a lot of content out there. So we'll continue to share that with Richard and the team at NatRoad, and you'll probably see it out there. But thank you again for your time today, and have a good day off tomorrow. And for those that have got a 4-day weekend, enjoy.
Thank you, Chris and Jordan, and thank you again, everyone, for attending today's webinar. If you have any other questions, please contact info@natroad.com.au. Today's webinar will be uploaded to our website and our YouTube channel, so please share it with your colleagues if they've missed out. Have a great day.